This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Okay, this is the second of two lectures, which is process costing with losses. And in the previous lecture, I explained what we meant by normal or expected losses and how we dealt with them. In this one, I'm going to look at abnormal gains and losses. First of all, losses. And I did introduce it briefly at the end of the last lecture, but now let me make it clear exactly what we're talking about and how we deal with it. And to do that, can you look at example 3, please? During May, the following costs were incurred in a process: materials, labour, overheads. A normal loss of 10% is expected. The actual output is 850 kilos, and losses, as I explained before, here then don't actually disappear. It's waste, and we are able to sell it cheap at here $9 a kilo. So let's do our costings as before, completely as normally. Materials, 1,000 kilos, $9,000. Labour, 18,000. Overheads, 13,500. So at that stage, 1,000 units or 1,000 kilos at a total cost of 40,500. Just as last time, we bring into our costings any normal or expected losses. And forgetting for the moment what actually happens, we expect to lose 10%, which is 100. And any revenue we treat as a negative cost. We expect to get $9 a unit. We expect to receive 900. And so what we expect to happen is that we'll end up with 900 kilos at a net cost of 39,600. So that's what we're expecting. And on that basis, the cost per unit, or here per kilo, 39,600 in total, divided by 900 is what? $44. And so there is the cost per unit, but that's based on what we expect to happen. And I did say at the end of the last lecture that, of course, although on average we might lose 10%, and that's what we do our costings on, it would be a miracle if we lost exactly 10% every month. Some months it might lose a bit more, some months we might lose a bit less. Oh, what's happened here? We actually output 850 kilos. And okay, we'll value them at $44, which is 37,400. But what's happened, of course, is although we only expected to lose 100, we've actually lost, 1,000 went in and 850 came out. We've actually lost 150. We've lost an extra 50. Well, that unexpected loss, that extra loss, we call an abnormal loss. That extra 50 kilos. And any abnormal loss we value at full cost per unit of here 44. And so the value of the abnormal losses is 2,200. Because those 50 kilos, we should have had them available as full production and be able to sell it. Okay, we did lose some extra this time, but we value them at the full cost per unit. Cost per unit, It's calculated bringing in the normal losses. Any abnormal ones are valued at full cost. As always, let me do a T account. Kilos, dollars, kilos, dollars. As always, debit with whatever goes in. So materials, 1,000 kilos, $9,000. Labour, 18,000. Overheads, 13,500. Immediately we bring in any normal loss. It was 10%, so 100. And remember, we bring them in at the scrap value of $9. 900 effectively is a negative cost. At that stage we do our costings and we got 44 a unit. Now we can put in the output, the actual output from the question, 850, and they'll be valued at full cost of 44. And I've already done it. They'll be valued at 37,400. The units obviously don't balance. Well, the missing units is the abnormal loss. We've now accounted for all 1,000. And any abnormal loss we value at full cost per unit, again 44. And again, I have done it up above. 50 units of 44 each is 2,200. Let's check it balances at 9, 27, 37, $40,500. And here, 9, 13, 15, 1, 38, 40,500. Now, I've said lots of times, so I'm going to say one more time. You can't be asked to write up a full process account, you can't. And for the numbers, it's not relevant. You know, we've done our costings up above. The most they can ask you is, if there's an abnormal loss, do we credit or debit, that sort of thing. So I do have to go through it and make sure, but it's the numbers you should be concentrating on rather than the T account itself. Just one extra thing though here. It says calculate cost per kilo, which we've done, prepare a process account, which we've done, but also a loss account, because we do now need to keep check on our losses. And so there will be a loss account. And first of all, when we put in that normal loss, we credited the process account, we'll debit the loss account. 100 kilos, $900. And at the moment, that's a debtor. You know, we expect to receive 900. Later on, we found there was an abnormal loss. Another 50. And they're valued at 2,200. One more thing happens though. In total, we did lose 150. All right, 100 normal, 50 abnormal. We did waste 150. And we do assume that all the losses, all 150, can be sold as scrap for this $9. And so when we get the cash from whoever's buying them, we'll debit cash, we'll credit the loss account, the proceeds. In total, it was 150 kilos. We might call it normal, abnormal, but whoever's buying it, as far as they're concerned, they're all the same. And we assume we get $9 a kilo for all of them. And so the money we'll receive, 150 at 9, is 13.50. Now fine, the kilos balance, we've accounted for them. We did lose 150 in total, and we sell 150 in total. However, the dollars don't, because on this side, $3,100, well, there's a missing figure. What's the missing figure to make it add up? 3,100 minus 1350. There's a missing figure of 1750. Now, I'll prove it to you in a moment, but that is the actual loss we've made relating to the scrap. It's a little loss that we would show on our profit statement. Don't worry about the profit statement itself, that's completely irrelevant for the exam. But you have your normal sales and cost of sales, but then this month there's just a little loss to subtract of 1750. And what is it? Well, the normal loss was in our costings and is part of the money we received, no problem. But you see, the abnormal loss there were 50 good units. Sorry. There were 50 units which should have been good units and weren't. Had they been good units, they'd have been worth 2,200 to us. Because they were waste, we effectively lost that. But we haven't lost everything, because we did sell them for scrap. Those 50 units, we will have got in 450, which means the overall loss we've made on them isn't so great. The net loss regarding those 50 units, the difference is 1750. Now, don't worry about all of that again in the exam. I've got to show you the T account, it could be mentioned. But far, far more important is the costings. Normal losses we build into our costings. Any abnormal losses are valued at full cost per unit. All right, last of all, but as you'll see, exactly the same rules, abnormal gains. Remember, this one we've just done, we expect to lose 10%. On average, perhaps we do lose 10% a month, but some months you might lose a few more. We did here. The extra is an abnormal loss. Other months, you might lose a few less. We call it an abnormal gain. Let me show you. There's no extra rules. Example 4, the last one. During June, the following costs were incurred in a process. Off we go. Let's do our costings. Materials, 2,000 kilos at a cost of $18,000. Labour, 36,000. Overheads, 27,000. So at that stage, 2,000 kilos, the total cost, 18, 54, 74, 81,000. 8, 14, 21, 2, 4, yes. Any normal loss? Yes. Well, any normal loss we bring into our costings. Again, it's 10% here, so we expect to lose 200. And again, any losses can be sold as scrap. So the normal loss, we expect to lose 200, we expect to receive 1,800. We treat it as a negative cost. And so what should happen is we end up with 1,800 kilos at a net cost of 79,200. And therefore the cost per unit or per kilo, 79,200 over 1,800 is how much? $44. There's our costing. And let's cost things out. Let's look now and see what the output was. The output was 1,840 kilos. Well, any output is valued at the full cost per unit of $44. So the output will be valued at 80,960. Oh dear, oh dear. Also though, this time, although we expected to lose 200, we didn't. We put in 2,000 and we got out at 1,840. And so instead of losing extra, we lost fewer. And as I said, if you lose more than you expect, it's an abnormal loss. If you lose less than you expect, we say we have an abnormal gain. And how much have we gained? You expected 1,800 and we actually got 1,840. So we've gained 40 kilos, like a negative loss. And just like abnormal losses, they're valued at full cost per kilo. So I said before, it's exactly normal rules. Your costing's always based on what you expect to happen. The normal loss, the output's valued at full cost per unit, and any unexpected or abnormal loss or gain, again valued at full cost per unit. Okay, for the last time, let me do a process account and a loss account. In the process account, debit with our costs. So materials, 2,000 kilos, $18,000. Labour, 36,000. Overheads, 27,000. Immediately bring in our normal loss. It was 10%, which is 200 units. And we bring in the expected scrap proceeds, $9 a unit, 1,800. And if you remember from last time, the double entry, debit the loss account with the normal loss, 200 kilos, $1,800. We then value our output. Well, we did our costing, sorry, and got 44 a unit. And our output, well, the actual output, 1,840 kilos, valued at full cost of 44. Can't be bothered rounding back. 80,960. The units don't balance. It's 2,000 on one side, 2,040 on the other. The missing figure is here. That missing 40 is our abnormal gain. When it was a loss, it was on the other side. When it's a gain, it's on this side. We've got 40 more units than we actually expected. And just as with abnormal losses, they're valued at full cost per unit. 40 units at 44 is 1760. And the double entry, debit the process account this time and credit the loss account with the abnormal gain. Uh, 40, 1760. Some people have a separate gain account, but that would never be relevant in the exam. We put it all to this loss account. The process account should now balance, so the debit side, 18,000, 36,000, 7,000, 82,760. The credit side, 82,760. Finally, the loss account. Again, we always assume all losses can be sold as scrap. And of course, although we expected to lose 200, we didn't lose 40 of them. And so it's 160 that were actually lost and 160 that we'll be able to sell. And so what are the proceeds from the sale? Well, at $9, was it $9? Yes, at $9 a kilo, the cash we'll get, 160 units at $9 is $14.40. Is that right? 160 at $9. Yes, $14.40. Again, the pounds don't balance as a missing figure, but this time the missing figure's on the debit side. This side adds up to 3,200. The missing figure is 1,400. And just as last time we had a missing figure, which was a little extra loss we'd made, here it's on the other side. This is a little bit of extra profit we've made, which would be a little bit added on to our profit statement. And although, well, I am in a sense wasting your time checking it because it couldn't be asked in the exam, but just to make sure you are clear where that's come from, what's happened, you see the abnormal gain it was 40 units. And what's it gaining us? Well, it would have been gaining us 44 because we got all those extra good units, which are worth $44 each to us. The only reason we're not getting a full 44 ultimately is in our costings, we'd assumed a full 200 units would be earning us $9. But of course, this abnormal gain, we're not going to get the $9 from them that we thought we would. So we're losing the $9 we would have got had they been lost and we scrapped them. But instead, we're gaining 44, the worth of these extra good units. So each unit is giving us a net 35. 40 units at a net 35 is 1,400. Although again, don't worry about that. It's just, I wanted to make sure you were clear what was happening. Anyway, that's your problem with losses in full. Normal losses built into the costings. Abnormal gains and losses, you've lost a bit extra or a bit less, always valued at full cost per unit. However, if you remember, there's several problems that can happen with process costing. That was losses. In the next lecture, I'll deal with what we call work in progress.